Okay, I'll show my screen on here, and then we can get started. There we are. Right, can you see my screen? Okay, brilliant. Okay, so for this weekend review and outlook, we'll just start with the review first. So, let's start with the outlook. As you can see, we've displaced above this high with no real retracement back down. So I'd like to see this high get retraced back into hopefully on Monday. If we pay attention to these lows as well, these lows are looking way too... Where have they just gone? These lows are looking way too suspicious to me, sorry. Looking way too clean. I would like these lows to get taken out as well. If these lows get taken out on Tuesday, then I would be expecting Tuesday low of the week. However, it is... Wait, let me pull up this way. It is around 600-700 point move, so I wouldn't be expecting those to get taken out very quickly. However, if we do look at the economic calendar, let me pull it up quickly. 1 second, guys. Right. I'm still streaming on there. Let me change window quickly, just so everyone can see it. Change window. I'll just share my screen. Share this one. Okay. So this is the economic calendar. Let me just make sure that OBS can see it as well. Yeah, they can. So on Monday, no news. For me, this could be a decently clean day. Monday might be, because we've got CPI later on in the week on Wednesday. However, I still don't have super high expectations. Same with Tuesday. Tuesday, no news as well. Tuesday would definitely not be great price action either, because we have CPI on Wednesday. So obviously, day before super high impact news, we do not have super clean price action, as we're accumulating for the next day's move. Thursday, we've got PPI and unemployment claims at 8:30. This could get utilized as manipulation, and then we could distribute back through the liquidity that we made during the PPI release and unemployment claim release, which usually does happen with when PPI and when unemployment claims are together. So don't be surprised if that happens. And obviously Friday, no news day. So if you're going to be trading on Friday, you're going to need you want to demand good price action, right? So these are the levels I'm watching for downside. This low right here, sorry, this high right here, these lows down here. If we quickly jump up to the daily time frame and we take 50% of this range as wick, see this? If you take that, wait, was this? I don't remember. Wait, let me just draw out both of these, because I usually do this beforehand and then I can quickly run through this during the live stream. But yeah, no, it was the top one. Sorry about that. So as you can see, if we draw out 50% of the daily wick, what you would start to see is this breakaway gap lining up with this 50% of the wick. And why this is of any importance is because if we drop down into like 15 minute, let's drop down to 15 minute, you would also see a breakaway gap here, and there's a fractalize all the way down. So I would like to see this breakaway gap get retraced back into, as it also lines up pretty well with this high right here. So if I draw that out now for you guys, there you are. So this would be my first drawn liquidity for lower prices. If this gets reached on Tuesday, then I'm expecting low of the beat to get formed on here. For my higher objectives, it might not get reached this week. They might get reached next week. I can't be sure. But these two price levels are my kind of monthly objectives, pretty much. 22190 and 22225. Draw these levels out on your chart. For now, I won't be going over why these are the price levels I'm monitoring. I will probably start talking about where I got these price levels from in a few months, because I don't want to release this too soon in the mentorship. And if you... Sorry. I'm not sure if I think I said in the last week in review how the level 21,600 was my drawn liquidity. The reason why that was my drawn liquidity, which was the weekly draw, and you could tell that was the weekly draw because as soon as we hit, let me go down to the 1 minute chart. As soon as we hit that 21,600 level, which is right here, look what happened. The rest of the day just started consolidating. Why does it consolidate? Well, because if IPDA has already met its target, it's already hit its target, where does it have to go next? It has nothing to do. So what does it do? It just consolidates. It goes back and forth, back and forth, back and forth. So after your weekly target's hit, do not trade. Right. So this is my weekly target, got smashed, and this is the weekly target. I think that's all for the outlook. Does anyone have any questions about the outlook there? Thursday's high candle on hourly for the rest of the week. Thursday's high candle. Let's see. This one. Yeah, you can, but because of these levels we have lower, I am expecting this liquidity to get taken out early on in the week. Because then CPI has room to expand higher on Wednesday. So if these get taken out early on in the week, then I'm expecting CPI to do something like that. I'm expecting CPI to expand upwards. Any other questions? And then after this, we'll go on to our best setups of the week. We still expect every downward movement to be manipulation since we're at all-time highs. Yeah. So that's exactly what I'm saying. This down, maybe Monday and Tuesday you could be bearish because we obviously have all these breakaway gaps unfilled. If our hourly does displace below this breakaway gap and these breakers right here, then this would obviously be our best draw right here. So be monitoring this Thursday breaker, because if we displace below this breaker, that's when you want to be leaning bearish. Before we react off of this level, don't touch the charts, because you've got no higher time frame point of interest. Only trade once we've reached this point of interest right here. Okay, should we go on to the review? Is that all the outlook done? Any more questions, or is that all? Alright, I think that's all. Let's go Monday. Monday. Okay. I'll switch my things to that. And oh, that is a chart I cannot show you. Let's change that. Change it back to there, actually. Well, I was not going to show you that. Okay, let's go do that. Change this one to ES and YM, obviously. Where's Monday? All right. Start there. Tuesday, Friday, Monday. Sorry, this is taking a while. To be honest, I might not even use YM because YM's so uncorrelated this whole week. So let's just keep YM out of the picture. Let's just use ES for now. So, it's Sunday, nothing to see here. Monday. Let's turn on my time cycles. And then we can get to reviewing. NWOG. Alley opens, why not? Alright. This is Friday's price action. Alright, Monday. London session. Not too much happening in London session. You could have done something like this if you fractalized this down into 10-minute cycles. This would have been alright off this breaker. But that's not ideal. That would not be a great setup, to be honest. Nothing I would take. Okay. So 8:30 opens up here. Sorry, 7 opens up here. We expand up. And obviously, this red line is our... What? Oh, sorry, no. This red line is those lows we marked out before. Sorry. I thought that was all-time high then. We displaced through that new week opening gap that we formed back here. And then, as I said, our new week opening gap can be used sort of like a support and resistance. So after it gets flipped, then we use it as support and price. So actually, something like this would have actually been a decent setup because we got our change state of delivery after we displaced above here. And we could have longed inside of this NWOG, inside of this BISI right here. This would have been a good setup because we also have a BPR right here. So maybe something like that would have been good. Something like this would have been a really good setup. Stop low, the intermediate term low, obviously. Targeting, well, there'll be no targeting this 90-minute cycle high, actually. That wouldn't have been bad. That would have been 3R. So that would not have been shabby at all. Then, oh, this is the big expansion upwards we got, isn't it? Yeah. So before 9:30, that actually would have been a very nice clean move if you caught that. For 9:30 here, do we get an SMT beforehand? Yeah. So we have SMT on kind of these lows here, pretty much, and these lows. So we've got 2 SMTs on this low, and then we displace up, and we close above this high, which actually would have been perfect because this high right here is our intermediate term high. So all we really needed to do is close above this high. Does that make sense? Which we've got right here, and straight away we retest this high, which would have been our entry, stop below the intermediate term low, and then for this you would have needed to use standard deviation. So because we're in price discovery, so we draw out a standard deviation here, and we just find out which one works out best. So a good level to partial at would have been the 100 level, which would have been right here. This 100 level was super clean because if you were in one of my live streams that I did in Nautilus's Nation, I think it was a tape reading one. Yeah, I'm talking about advanced ranges. As I said, these solid levels in the market are utilized as support and resistance as well, and you can use them as algorithmic signatures later on in price as well. So they kind of use as key levels. So, and because this standard deviation lines up really well with that 100 level, that would have been a really good place to partial at. Same with this 4.5 standard deviation at 25. So taking another partial there, which would have got you a 5R. This is really nice. And because we're trading new all-time highs, I would have held just one contract. Just let it run. Because why not? We're trading out new all-time highs. All we're looking for is longs, 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 longs. We're not looking for any shorts. Every move down, we're anticipating that to be a manipulation to run higher. Let's see. Still a Monday. PM session, just chop. I'm not even going to look at that. There would have been nothing clean there. Go into Tuesday's PM. So AM, sorry. So this AM session was really uncorrelated. See how NQ has been moving up, 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 up. But then ES is moving down. These are not conditions you want to be trading in. These are super uncorrelated. Nothing you want to see here. Okay. Apart from this one move, which I actually caught on Tuesday, 1052, this low formed, and then we displaced. So inside of our macro, we had SMT somewhere. I think it was in the low time frames we had SMT on. But yeah, I think it was on the 15-second we had candle to candle SMT, which is the SMT that I took to take this trade, because obviously this 90-minute cycle SMT is our external SMT. Now I need to look for an internal, which is the 15-second inside of these candles right here. And then on the 15-second, this bearish candle formed our breaker, and I took a long off of the breaker on the 15-second. So I took it there, and I targeted the 30-minute cycle high. Got a 3R on that one. That was the only day. That was the only trade I took on that day, because the conditions are appalling. Let me get all this makeup off my chart from the Outlook. Okay. So this right here, really quite nice AMD setup right here. So sorry about that. Keep looking at the wrong things. 7 to 8:30. Look at that accumulation. Super nice accumulation. We run up, and this is our manipulation for this move down, and then this move down is our manipulation for the bigger move back up. So this was our manipulation for this big move up, and then this manipulation was our manipulation for this move down. Okay. PM session, also pretty nice. It's not too bad. Actually, this long is the long I took. I think I posted this one. Yeah. So this is the post, the long I took. We had our SMT, a 90-minute cycle SMT. And then obviously, this candle right here is our 10 a.m. candle. And I actually just posted a lecture on YouTube talking about open, high, low, close. I posted it probably 5 minutes before I started this lecture. Sorry, this thing. So I'm drinking some water. Right. Yeah. That lecture I just posted is really good. As I mentioned in that, our 10 a.m. opens low. You see how it immediately drops down? And then I mentioned SMT confirms the end of our manipulation phase. So this right here is our SMT, which confirms that we are no longer manipulating. And then what confirms to me is this big green candle right here. This candle right here is the candle that confirms to me we are out of this sell program and into a buy program. Why is this? Because we displaced above this SIBI right here. Because we had SMT, we opened low on the hourly, because this is the hourly candle open, 10 a.m., which is a pretty big time that you should be marking out in charts. Because 10 a.m. opens low immediately, forms SMT, end of the manipulation phase. Then we run up above this SIBI that formed this run down and formed a imbalance, which stayed as a breakaway gap, which would make sense because we distributed out of this volume imbalance into thing, so this should stay open as a breakaway gap. And then I entered on this down close candle right here, held, took no partials until down here, and then rest of my position got stopped below the slope, right? That was a super clean setup. Pretty much mostly time based right there. Let's go back up onto the 1 minute. PM session. This would have been. Oh yeah. This would have been a super nice setup. This was during. This is the day I was tape reading. This is such a clean setup as well. This BPR right here. We had SMT. Let me get this SMT up. Where did we have SMT? Yeah, right here. So SMT on these lows. This is on the 15-second, by the way. So that's why it looks weird. You had SMT on these lows right here. And then from that SMT, as I said, SMT marks out the end of our manipulation phase. So after this SMT gets formed, we run up, closing above this high right here. We drop back down into this balanced price range, and look at the bodies. Because of these bodies and how it's rejecting the bottom of this balanced price range, that's what makes it so high probability. This should reject. We reject up. First partial should have been at this 30-minute cycle high. Second one, 90-minute cycle high. Third one, this 90-minute cycle high. And then, obviously, you just hold for the rest of the day. And I don't know if any of you were in that live stream, but right at the end, I mentioned my daily drawn liquidity was the 50 level. Sorry, it was this 50 level. And it came just short of that 50 level, which is really annoying because I really thought we were going to hit that. But, yeah. But this long right here was super, super clean. Moving on. Let me put this chart back onto the 1 minute. Okay. Moving on from there to AM session. So this again were uncorrelated. It's not clean. This isn't something you want to be trading. Actually, let me try to put the mic there. Let me see if it sounds better. If it's right here. Does the mic sound better when it's like this? That's day before NFP. Yeah. So this is the day before NFP. This is exactly why the price action is so bad right here. Thursday, this Thursday short was actually pretty decent. Because right here is our intermediate term low. Mark it out. Intermediate term low because we form it inside of this BISI. So that right there. Yeah, I remember. You shorted like somewhere around here and you got stopped out by this. That was sad. But you should have re-entered on this. This is a really nice setup. Obviously, we got a unicorn model right here inside this blue box. Entry short, stop either above this high or this high. It's up to you how safe you want to be. Let me get my short position out. So right there, short there. First partial, this 30-minute cycle because he swept it high. Next 90-minute cycle low, and then this 90-minute cycle is low. Nearly a 5R right there. That would have been a super nice trade if you caught that. Let me get rid of this red box. It's really hard to see. Sorry about that. Okay. Again, just chop. Now moving into... Yeah, it does. But as I said, it doesn't mean that you can't trade manipulation. Like, I take trades on the left side of the curve all the time. Because if you look at a market maker model, it doesn't mean that you can't trade the left side of the curve. I trade this side of the curve all the time. Right? This is the left side. You can trade this all the time. Just because something goes against your bias doesn't mean you can't trade it. If you know your point of interest, your higher time frame point of interest, and you're looking for a long, let's say. If you're looking for a long, and you're moving into your point of interest, and you know it's going to get hit, that's the draw on liquidity. Why wouldn't you take a trade down into that point of interest and then long after? There wouldn't be any reason why not to. If you find a good setup going against your bias and you have a good draw on liquidity, you can still take it. You just need to be careful because usually the move isn't as... yeah, you got to note that. Although the move usually isn't as volatile as the right side of the curve would be, you can still take it. So obviously this side right here would be much faster than the left side of the curve, but that doesn't mean you can't still take the left side of the curve. Okay. Moving into Friday. This is NFP day. NFP comes out and we manipulate and take out all of this sell side liquidity resting below these lows. Sweep all that sell side liquidity. Lovely. And if you notice, this purple line is the midnight open. Look at how NFP holds that midnight open line. Look at where it opens up. We drop down into... Oh, we come just short. We never actually drop down into discount of this BISI. So if I was going to take a trade of this, I would have wanted it to come up into equilibrium of this BISI. Can you show a 15-second chart of the 930 open? What? Here. Yeah, go. Sure. That's the 15-second chart. So I need more water. I've been talking like all day today. Okay. The reason why it doesn't hit would be because of this high back here. If we look at this high, look at the precision on that. The high just taps it, goes one tick below, and then comes back up. That's why we didn't reach equilibrium of that BISI there. However, this long here would have been really clean. A closure above this SIBI. That right there would have been really clean. Either entering just on the closure or, let me get this out, back into this breaker, so at the bottom of this wick. train there. And then obviously, first target this 30-minute cycle high, and then rest you need to use standard deviation for. So pull a fib from there to there. Standard deviation. 600 level was my weekly drawn liquidity, and this lines up pretty well with that. So that 600 level would have been my target. I would have took a pretty big partial on that, just left one runner for the rest of the day, which wouldn't have really done much, to be honest. It's just chop it, chop it, chop it, chop. And then that's the rest of the day. So are there any other questions, or is that all? No? Is that all? Alright. Well, good speaking to you. Hope to see you in the next live stream. Hope to see you watching all the lectures, commenting. And yeah. Until next time. See you everyone.